Hi and welcome to Debt Tell, and in today's video we're going to be talking about an escrow account which might be tied to your mortgage payment. So let's get started. What is an escrow account? Well, an escrow account is an account set up by your mortgage lender in order to pay for certain expenses related to your property. The payments you make into this escrow account are tied normally to your mortgage. What do escrows cover? So the escrow account is used to pay for certain expenses such as homeowners insurance, property taxes, and if required, your mortgage insurance. So typically these expenses are paid on an annual or semi-annual basis, which means that they are generally large chunks of money at one time. And so an escrow account collects amounts across a 12-month period, making it smaller and easier to keep in your budget. So can your escrow payment change? Yeah, it can change on a up to yearly basis because your property tax or your homeowner's insurance may go up. If that's the case, then your payments for next year will also go up, as again, they try to do an assessment to calculate what you're going to owe in the following year and then split that amount in 12. So what happens if your escrow account fails to cover everything? So when your escrow fails to cover everything, it's called a shortage, in which case often the mortgage lender will pay the remaining amount for you and then require you to pay an upfront one-time lump payment to make up for that deficit. Now, in times, if you don't have this money, and sometimes it can be a shock, hundreds of dollars to thousands of dollars if they mess up, then you want to talk to them to see if you can add it to your mortgage payment in order to play catch up and continue adding escrow. But note that this will increase your mortgage. What happens if there's too much money in the escrow account? Well, this sometimes happens and it's called a surplus, and there's usually one of two things happen. Either one, they take this extra money and roll it forward into your next year's escrow amount, in which case you will be then paying less over time, or they write you a check for the surplus. So what happens to the funds in the account? Well, the money just accumulates into this account, and then the mortgage company will go and pay the amounts due when they are due from that account. Are you required to have an escrow account? That really depends on the mortgage terms that you agreed to. Some lenders may require this, and some lenders will allow you to waive the escrow account. It's all dependent on whether or not it's a condition of the loan, so you want to make sure that you talk to your mortgage lender to understand the terms for the loan that you already have or a loan that you may be looking to get in the future. So when you want to weigh the pros and cons of whether or not you need an escrow account, there are a couple things to consider. One is that the convenience of an escrow account, because your mortgage lender is the one who's responsible for paying it, and that ensures that you won't have a accidental late payment. Basically, having an escrow account is kind of like having an automatic sinking fund. Don't know what a sinking fund is? Then check out this video. And what it does, again, really simply, is it takes your large lump sum if it's due on a yearly basis and breaks it across 12 months. So smaller payments, easier to handle on a budget. 2, costs, which is that having an escrow account tied to your mortgage may increase your mortgage payments. Also, sometimes when you are setting up a loan and therefore setting up an escrow account, you may be required to have a large initial deposit to cover your upcoming expenses. 3 is flexibility. If you're the one who decides to be responsible for paying your property-related expenses, then you have more flexibility with shopping around at any moment's notice and having an easier time changing the information instead of having to call a third party, in that case your mortgage lender, to make the changes. So yeah, that's just a quick video about your escrow account, which is oftentimes a surprise for people who have them tied to their mortgages, where they get so used to paying a monthly payment, and then next year property value goes up, the property taxes go up, or homeowner insurance goes up due to a natural disaster or just higher than usual claims. And when that happens, your mortgage payment will also go up, and people get really surprised by this. So just wanted to touch base and cover that. If you found this video helpful, please give it a like, and as always, more than happy to answer any of your questions. And I will see you in the next video. Bye!